Ogni anno oltre 40.000 persone viaggiano verso Omaha, in Nebraska, per ascoltare le leggende viventi del mondo degli investimenti, Warren Buffett e Charlie Munger. Quest'anno, nel meeting annuale della Berkshire Hathaway del 2022, hanno condiviso i loro pensieri su tantissimi argomenti, su quello che vedono accadere nel mercato azionario, nell'economia, riguardo l'inflazione e addirittura su Bitcoin. Questi meeting sono diventati leggendari perché hanno delle lezioni importanti per tutti, dagli investitori principianti che hanno appena iniziato ad investire a chi gestisce portafogli multimiliardari. In questo video ho condensato le 7 lezioni più rilevanti del meeting e assicurati di mettere mi piace come segno di apprezzamento alle ore che ho dedicato per creare questo video per te. Buona visione!
There's all kinds of people watching this that are long Bitcoin, and there's nobody that's short, and nobody wants their windpipe stepped on. And I don't blame them. I don't like people who step on my windpipe. But I would say this, that if the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, and you said for a 1% interest in all the farmland in the United States, hey, it's this bargain price, $25 billion. I'll write you a check this afternoon, $25 billion, now I own 1% of the farmland. If you tell me you own 1% of the apartment houses in the United States, and you offer me a 1% interest, so I'll have a 1% interest in all the apartment houses in the country, and you want whatever it may be for another $25 billion or something, I'll write you a check. It's very simple. Now, if you told me you owned all of the Bitcoin in the world, and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, they have the same people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. And if I've got all the Bitcoin, I'm back where whatever his name was, who may or may not have existed, was 15 years ago. If I've got it all, he could create a mystery about it. But everybody knows what I'm like. I mean, so if I'm trying to get rid of it, people will say, well, why should I buy some Bitcoin from you? I mean, why don't you call it Buffett coin? Make your own or something. What? Do something. But I'm not going to give you anything for it. And you'd be right, incidentally. But that explains the difference between productive assets and something that depends on the next guy paying you more than the last guy got. Now, if you look at it, a lot of commissions have been paid, and there's all kinds of frictional costs that are very real that somebody has paid to a bunch of people who facilitate this game. But whatever one group of the public has taken out, or one group of owners, has come in from other people. I mean, other people have entered the room and they've moved money around, but there's no more money in the room. It's just changed hands with a lot of maybe fraud and costs involved. And, certain things have value that produce something tangible. Assets, to have value, they have to deliver something to somebody, and there's only one currency that's acceptable in the United States. I mean, you can come up with all kinds of things. We can put up Berkshire coins, or we can put up Berkshire money or anything like that. But we get in trouble, I guess, if we call it money. But in the end, this is money, and there's no reason in the world why the United States government, whose currency people prefer, there's just under 2.3 trillion just of these little pieces of paper floating around some places, 7,000 for every man, woman, and child in the United States. And of course, most of them probably aren't in the United States. Who knows? But this is the only thing that's money. And anybody that thinks the United States is going to change to where they let Berkshire money replace theirs, is out of their mind. I mean, so anyway, with those few deficiencies, whether it goes up or down in the next year or 5 years, 10 years, I don't know. But the one thing I'm pretty sure of is that it doesn't multiply, it doesn't produce anything. It's got a magic to it, and people have attached magics to lots of things. I mean, the gold in Wall Street, create magic.
Government of China has worried the investors from the United States who invest in China more in recent months and years than he did in earlier periods. So there's been some tension, and it's affected the prices of some of the Chinese stocks, particularly internet stocks. Just in the last day or two, the Chinese leader has sort of reversed course on that and said he went too far and he's going to pull way back and so on and so on. So we're having some hopeful signs. But yes, there are more difficulties of dealing with the regime in China than there are in the United States. And it's different. It's a long way away, and they have their own culture and their own loyalties and so on and so on. The reason that I invested in China is I could get so much better companies at so much lower prices, and I was willing to take a little political risk to get into the better companies at the lower prices.
The question is on market timing. You have always said that it is impossible to time the markets. Yet, if we look at your track record, you have had amazing timings with some of your key decisions. You got out of the stock markets in 1969-70. You got back in 72, 73, 74, when the markets were really cheap. You did the same thing in 87, 99, 2000. And today, we are sitting on a significant amount of cash when the markets are going down. My question is, how do you time the big market moves so well?
The interesting thing is, obviously, we haven't the faintest idea what the stock market is going to do when it opens on Monday. We never have had. We have never made, Charlie and I don't think, in all the time we've worked together, and I'll tell you something later on maybe about how learning takes place, but I don't think we've ever made a decision where either one of us has either said or been thinking we should buy or sell based on what the market is going to do.
No.
Or for that matter, on what the economy is going to do. We don't know. Sometimes I get some credit someplace for the fact that, how wonderful it was that we were optimistic in 2008 and when everybody was down on stocks and all that sort of thing. We spent a big percentage of our net worth at a very dumb time. and I shouldn't say we, it's I. We spent about $15 or $16 billion, which was a lot bigger to us then than it is now. We spent it in the last few weeks. There were a period of 3 or 4 weeks between Wrigley and Goldman Sachs and General. At a terrible time, as it turned out. I mean, I didn't know it was going to be a good time or a bad time, but it was a really dumb time. If I'd had any sense of timing and waited 6 months until, I think the low was in March, and in fact, I think I was on CNBC maybe that day or something, but I totally missed that opportunity. I totally missed, in March of 2020. We have not been good at timing. We have been reasonably good at figuring out when we were getting enough for our money, and we had no idea when we bought anything. Well, we always hoped it would go down for a while so we could buy more, and we hoped even after we were done buying and ran out of money that if it was cheap, the company would keep buying, and in fact taking our interest up. I mean, we've never figured out insights into the economy. When I was about 11 years old, March 12th, I guess, 1942, March 11th. I bought stock when the Dow was 90, well, it was 101 in the morning. It was 99 at the end of the day, I think. And, now it's 34,000 or... The stock market is it's always been a combination of a casino and when I talk about Wall Street, I'm talking about the whole capital formation market, and trading market, et cetera. But the market has been extraordinary. Sometimes it's quite investment oriented, kind of like it always you read about in the books and everything, what capital markets are supposed to do, and you study it in school and all that. And other times it's almost totally a casino, and it's a gambling parlor. And that existed to an extraordinary degree in the last couple of years, encouraged by Wall Street, because the money is in turning over stocks. I mean, people say how wonderful you've done if you bought Berkshire in 1965 or something and held it. But your broker would have starved to death. I mean, it's Wall Street makes money on one way or another, catching the crumbs that fall off a table of capitalism and an incredible economy that nobody could have ever dreamed of a couple hundred years ago. They don't make money unless people do things and that they get a piece of them. And they make a lot more money when people are gambling than when they're investing. I mean, it's much better to have somebody that's going to trade 20 times a day and get all excited about it, just like pulling the handle on a slot machine. Bonds can swindle the equity investor too. Everything, inflation, I should say, swindles the bond investor too. It swindles the person who keeps their cash under their mattress. It swindles almost everybody. The problem, if you have a business that doesn't take any capital, let's just say the dollar depreciates 90% or something, so things cost 10 times as much. If it doesn't take any capital, you can charge 10 times as much, and you've kept your relative position. But most businesses take some capital. If our utility business, just say that the dollar is worth 1/10, some years hence from now, we have to have 10 times the capital investment, basically. And we get paid a return on that. But we have forced capital investment to essentially keep them in the same place. And if you really could have a totally stable unit of monetary use for the next 100 years, it would be better for business and investors in general.
Those checks that were just mailed out to everybody who claimed to have a business and claimed to have employees, they probably drowned the country in money for a while. And as you say, they probably had to do it. But it was something that had never been done on that scale before.
But we had a problem we hadn't had before.
Yes. No, I'm not saying it wasn't a good idea.
I mean, in my book, Jay Powell's a hero. I mean, it's very, very simple. I mean, he did what he had to do. If he had done nothing, it'd be very easy to engage in what you would call thumb sucking then. And I shouldn't say plenty of, but there are other Fed chairmen that would have been sucking their thumbs, and the world would have fallen around them. We will always have a lot of cash on hand. And when I say cash, I don't mean commercial paper. When 2008 and 2009 financial panic came along, we didn't own anybody's commercial paper. We didn't have money market funds. We have treasury bills. We believe in having cash, and I've been a few times in history, and will be more times in history where if you don't have it, you don't get to play the next day. I mean, it's like oxygen. It's there all the time, but if it disappears for a few minutes, it's all over. So our cash was down on March 31st because, as you saw, we spent that large sum there in that brief period during the quarter, $40 billion. But we will always have a lot of cash. Money's kind of an interesting thing. People seem to like to talk to me about it. I mean, they don't ask me how to dance or anything like that, but they do. They ask about money. And so it's a photo of a $20 bill. And it says at the top, Federal Reserve notes. Now, Federal Reserve note, we've done all kinds of things with money in this country. It's amazing. The country only a couple hundred years old. The number of different experiments we've made with banks and everything. But we finally just decided to let the Federal Reserve do the issuing of money. But it says this note is legal tender for all debts, public and private. And that makes it money. Money is the only thing that the IRS is going to take from you. You can offer them paintings, you can offer them all, whatever, but this is what settles debts in the United States. And I thought that you'll hear a lot about various kinds of money. This is the only kind of money you're going to see, in my opinion, throughout your lifetime or even throughout Charlie's lifetime.